Well, hallelujah. Hello, hello. Hello, everybody. Making sure my microphone is good. Giving some time to come on in. Oh, which way is this supposed to go? There we go. Give us some time to come on in. I need to make sure that we're live on YouTube. Yes, it says we're live on YouTube. Anybody watching? If so, let me know if the sound is fine. Is the sound okay? If not, please tell me. I believe on StreamYard, I cannot see I can't see your names. I think you have to give StreamYard permission for me to see your names. So if you want me to see who it is that's commenting, then you're gonna have to give StreamYard the permission to do that. I hope everybody's doing good today. Hope everybody's doing well. Today is the first day that we're doing our 2 o'clock live. I probably need to get me like a 2 o'clock live banner where it'll show that I'm live at 2 o'clock each day. The plan is to do this every day. We're going to talk about different stock trades, option selling. We're basically going to do stock things, talk stock option things, not just stock things, but options things in the afternoon. That's what we're going to do. Alrighty. Making sure I'm giving time for folks to come on in the room. Don't know. Question. Don't know. Okay. Let's see where we are. Options for beginners. We had some trades that I put out over the weekend. Some content that I put out. Cash secure puts and covered calls. I do want to cover those while we're on today. Want to talk about the fact of who I am. For those of you who are kind of watching going, well, who is this person? I am Arlissa Pinkelton. I am an educator and who became a stock market trader. So that's where you get the name Educator2Trader. I've been teaching mathematics to middle school, high school, college for the last, 17 years maybe. I've been a math teacher for the last 17 years. And I was an engineer before that, mechanical engineer. I graduated from Tuskegee. Woo, woo, woo. I graduated from Tuskegee back in 1992, so it's been a while. And I worked as an engineer for a while, and then I switched over to become an educator. I really enjoy what I do. Along the way, decided to learn more about the stock market, stock options, and suchy. And that's what I've been doing. But I trade the stock market from the seller perspective. I'm an options seller. I coach sellers. I coach seller strategies. We make weekly and monthly money as sellers. Yep. We're like the insurance company or, Walmart as the company that sells. Somebody has to come by. Walmart is the seller. Right? So that's what we are. I'm the seller. Hold on. I want to make sure that we make sure all the people who are looking for us can find us before I get into it, because I want to get into some shares and stocks that we got for the week. Want to make sure that we can do that. Oh, come on. My computer, of course, wants to go very slow now that I want it to not go so slow. It wants to take its pinchy time. Oh, hello. Where'd you go? Where'd you go, go, go? There we go. Oh, yeah. Can't type anything fast because then your fingers get all in the way. There we go. Let's look at some trades. I posted content. Let me share my screen. I want to get this opened as well. I'm going to share my screen so we can see the content that I put up over the weekend that included 4 covered calls trades and 4 cash secure puts trades. And we're going to go look at each of those now. As sellers, we don't have to rush into the market as sellers because theta decay and time decay is our friend. Time decay is our friend. So we don't have to rush into the market right off rip. If you're, day trading, I'm definitely not knocking how anybody else does it. Not at all. There's no judgment here. There's so many ways to make money in the stock market that you just really need to pick a lane and ride it. There's 7, 8 streams of income. You can employ one of them, all of them, none of them at the same time. Well, don't say none of them because then you wouldn't really be in the stock market. But you can employ 1, 2, 3, all. You can do any of that you want to and generate resources from the stock market. There's multiple ways. You can buy and hold. You can buy shares and sell them. You can sell shares, which is called shorting. You can buy calls only. You can buy puts only. You can sell covered calls, which of course is the selling side. You can sell puts, selling side. You can do credit spreads, which is a seller strategy. You can do debit spreads, which is a buying strategy. You can partner these up. You can use leaps and covered calls. You can do shares. You can do butterflies. I mean, there's so many different things you can do to make money. You really just have to pick a strategy. And when you've picked your strategy, you just have to go with it. Pick one, learn it. Pick 2, 3, whichever you want to do, and learn them to where you can get a repeatable plan, a repeatable strategy, and you make it work for you. You don't have to do the things, and you have to watch sometimes too. The shiny object syndrome, where basically you're looking for all the shiny objects or what's the latest strategy or the latest thing. You see somebody who says they made money doing this or doing that, and the next thing you know, you want to be doing the same thing. You want to be careful with that. Pick a strategy, pick 1 or 2 and go with them. All righty. If there is trouble with this stream, y'all let me know. Let me know in the comments. Oh, I see a comment there. I hope the sound is good. Thank you, Gigi. Appreciate that. Let's go and look at what stocks we have. What stocks we looked at over the weekend. Sharing my screen now. I'm going to put me here, and then I'm going to present. Share the screen. Gotta select the window. Okay. Very good. This was the video or the information that I put up. Let me see if I can make it full screen. I don't want the noise. There we go. And I want to pause the video. These are the 4 that we have for covered calls. Open, EOSE, KLR, and APLD. When I'm looking for covered calls trades to share, because they can go up to any of the prices, I try to keep them down around or below the $1,000 mark. And that is because many times when you're starting off as a beginner, You don't necessarily want to do covered calls on stocks that are $40 and $50 a piece, because that means you need to own the shares and then you're covered calling it. Now, if you have 100 shares of a stock, then doing covered calls on it is perfect. But if you don't own the shares already, then covered calls means you're going to need to acquire 100 shares in order to do a covered call on them. Most times the wheel starts, if you're doing the wheel strategy, which is a sales strategy, most times the wheel starts with you selling cash secure puts first. It doesn't start with covered calls, but I did want to see that these are some covered calls we're going to look at. And let's go to the list of what's in the cash secure put list. There we go. So for the cash secure puts ideas, we've got Space, AMC, Applied, again, and EOSC. Again, I'm keeping these, try to keep them below the $10 mark, because when you're selling cash secure puts, you are leveraging the amount of capital that is equal to your strike times 100. So if you pick, for example, Space, and you pick that 3 strike, I think it's around $3 or $4. If you pick the 3 or 4 strike, you're going to, let's say you pick the 4 strike, you're going to have the 4 times 100 shares for the options contract. That means you're going to leverage $400. My numbers are running together. You're going to leverage $400 of capital, right? Minus the amount you take back in premiums, but that's how much you're going to put out as far as capital goes. So depending on the size of your account, or depending on if you're new, you may not want to leverage thousands of dollars. So I try to find stocks that are less than $1,000 of leverage that will be required. This is why we end up with Space, AMC, Applied, and EOSE. I think it's important to understand the strategies. That way, when you have the strategy, then when it comes time that you're ready to do more expensive stocks, then at least you understand the strategy and what's going on. As your account grows, as your account gets bigger, as your knowledge grows, that's an important thing. Your knowledge needs to grow too, not just your account, because having more money doesn't make you a better trader. It just makes you a trader with more money. Doesn't make you know any better, doesn't make you have any better wins, none of that. You can lose more money just like you can make more money. So you can't go with I got more money, so I'm no. It does not work like that. Okay. Your knowledge has to grow along with your money. All right. Let's go look then at, let's start with what we have. I've got us in our sim. Hopefully it's going to function properly. I'm starting with Space. That's the first one on our list. See if we can get Space to pop up. We're looking at cash secure puts. And if we're doing cash secure puts, when you are selling a put, you want your strike price to be under current price, with the thought and belief that price is going to go up. You're picking a strike below current price with the belief that the price will go up, or at least stay up above your strike for the time frame that you're looking at. Is that clear, everybody? If you got any questions, please make sure you ask them in the chat so I can comment, so I can see what kinds of questions are being asked. Selling a put, you want to pick a strike below current price with the thought that the price will stay above your strike price at expiration. So the current price of Space is $4.16. I'm going to switch over to the chart. Hope it'll fill in. Oh, it did. Good job. So you want to chart it and see what is the support on that particular stock on the day chart, on the daily chart. Notice we're up here. This is a daily chart, which means every candle is a day worth of data. You want to see what is the support, because the support is where you believe price won't go below that support. That helps you to decide what you're going to do with strikes you should pick. If we're looking for support here, the nearest one would be right over here on this candle from June the 15th, and the bottom of this candle would be 407. we're not far from there, but that lets me know that this is a range. You see these several candles are right here. This is an area or a zone of support. So to look at a 4 support area on space wouldn't be bad. So let's go see if we're looking at 4 as our support area. We want to get that as a on the put side. Make sure I'm on singles. Yep. We're looking at 1 week and we're looking at the 4 strike on the put side. 4 strike. If we pick the 4 strike, we are leveraging $400. 4 strike times 100 shares is $400. It's what you're deciding. You're going to allow your broker to reserve that $400 minus the premiums you take in. But your broker is going to reserve this money while the trade is going, so that when the trade is over, if the price is down in the 4, below 4, you're basically going to be put 100 shares in your account. That's why you're selling puts. And when you're selling a put, you're saying, if the price comes down here, I'm willing to buy 100 shares at this price, at the 4 strike. So the broker is going to reserve that $400. It's basically going to block your buying power in the amount of $400 to make sure that if this trade, gets exercised for less than 4, that you've got the money sitting there to buy the shares. That's what your money is going to be used for. If the price is above $4 at the expiration, then the broker is going to just release your buying power back to you, and you get to keep the premium money that you collected, and we're good to go. So we talked about space. This coming Friday, you could do the $26 is what you would receive. We're under the bid column. You would receive $26 in premium for allowing the broker to block up $400. That's about a 5%, a little more than 5% return on your collateral in a week. Several days. It ain't even a whole week. Today's Monday, and this would end on Friday. But let's look at 1 more week. Maybe you go out 1 more week. The further you go out in time, the more you see in premiums. Now, if we go out to July 7th, we're going to collect $40 in premium. I personally like to take in at least 10% in premiums. If I'm going to leverage $400, I'd like to take in at least $40 in premiums. That's for me. I'd like to do that. So I like this July the 7th expiration with the 4 strike. If you're more conservative than this, I like this one. We'll come back to it. But let's say you're a little more conservative and you're more comfortable at 3.5. Then again, when you're selling, you're in the bid column. You'd go to 3.5 and select this bid. And then you're going to collect $19 for 2 weeks. This is going to be, again, about 5% return on your money. But you're saying that you believe space will stay above $3.50 as its price over the next 2 weeks. You don't believe it will come down to 3.5. And you're also saying you're willing to buy 100 shares at 3.5 if it does come down to that place. If you don't close the trade on your own, because you can always close it, you don't have to wait till expiration and let it do what it does. You can close these trades whenever you want to. Most people who are trading cash secure puts for income, they have a plan maybe at 50% or 70% of profit. They close it. That releases their buying power. They keep 50% of the premiums that they took in, and they just find another one or do that one again. You can rinse and repeat, right? I told you I like the 4 strike, so I'm going to go back to the 4 strike on July 7th, and I'm selecting price here, $40. Confirm and send. When you do confirm and send, it's going to talk about, how much money you're going to get for profit, which is $40. What's your max loss, which really there is no max loss because you're going to be buying shares. So this is, I call cash secure puts a no lose strategy, because you either keep the premiums or you get the premiums and the stocks. Kind of a no lose in my opinion. But you put 360 is really what's going to be affected is $360 of your buying power, right? You have to be in a margin account in order to do cash secure puts. Take that back. You do not. You can do cash secure puts in a cash account, but what you're saying is, I'm going to use my cash to secure this this trade. You can be in a cash account or a margin account. It's really up to you. Good thing about cash account is you can open and close them in a daily basis and don't have to worry about day trades, right? But you can do it in a margin or a cash account. It's called a cash secure put because you are securing it with your cash. Alrighty? We looked at space. Now we're going to go look at AMC. I need to figure out a way that I can see the comments. Let me see if I can go here and move this to another screen so I can see the comments. That's not what I wanted it to do. Wrong screen. That needs to be up. Yes. And StreamYard, can I see comments? Solid Gaming, what's your question? I see just question marks. What's your question marks? You got to ask a question to put question marks. What are you doing? I don't know. I don't know what you were asking, Solid Gaming. Okay. I believe I'm sharing the screen. Jamie, am I still sharing the screen? If I am, please put me a yes in one of these comments. So it says I'm sharing. Alrighty. That was space we looked at. Now we're looking at AMC. Let me go to make sure that everything is being... Oh, yeah. Where's the mouse? Oh, it's hiding. Oh, don't do that. Don't do that. Don't do that. Move this over here too. Whew. So many stings. So many things. Alrighty, I think I'm good here. Okay. Let's look at AMC. AMC, $4.01 currently is the price of AMC. Let's look at the chart, see about finding us some support. We're talking about cash secure puts here. So we're selling puts. That's what we're looking at right now. In case you just joined me, we're selling puts. If you're on YouTube, please subscribe to the channel. It just helps us out, helps us to grow our following, helps us to where you don't miss anything, all those good things. Like and subscribe. Alrighty, so I'm on AMC right now, looking at the chart. AMC kind of likes this area. It likes this area down here but this is the support. If you're looking at support here, you got back from, what's this, April the 4th. It's support. It's gone up a bit, danced around, and then come back down. But I see this as support. That's 391. 391. This candle here has a low of 388. This candle has a low of 388. So you could either do 3.5 as your support area, as your strike, or you can go with 4.0 if you believe it's going to be above 3.5. Let's go look at it. Let's look at for this coming Friday. We were looking at this Friday coming up, June the 30th, for a put. Remember, we're in the bid column. I know you'll hear me repeat stuff because repetition is the mother of learning, and I am an educator, so I will repeat things because I know sometimes people hear it, but then they don't hear it. So if you get it, then cool. It'll be helping the people who don't get it. Righty? So you go in the bid column as a seller. You can look at the 3.5 strike, which for this week is going to pay $4. You're going to pay probably $1 in fees, $1 and some change to open and close it. So 65 cents each way. You might as well get a few more dollars on your trade. You don't want to lose all your profits in fees. If you go to the 4 strike, the 4 strike here is paying $19. 4 strike. Remember, 4 strike, just like with space, you're looking at a $400 worth of collateral that is being blocked up by your broker in buying power. All right. It loves that $4 zone. You're absolutely right. Uh, absolutely right. Okay. So if we look at 1 week, for $20, $19 is about 5% return on your money in 1 week. Let's go out another week. Looks like I might have this position in my sim already, but if you go out just 2 weeks, AMC with the 4 strike is paying $43. It's paying $43. I like that one better. I like that one better because I've watched AMC enough to know that it tends to stay above $4. Even if it dips a bit, it stays up above $4. So I'm going to go ahead and grab that one. 2 weeks. So you've got next Friday expiration, 4 strike. The broker is going to block up $400 minus the $43. So the broker really is only blocking up $357. And as long as the price of AMC is above 4, that premium will continue to deteriorate. As sellers, we want to sell at one price or sell high, and we buy back lower. As sellers, we sell high, we sell at a premium here, and we want the premium to deteriorate so that the same trade is worth less money as time passes. And when we get to expiration, we want it to be worthless. Where it's not worth anything, we sell high and buy back low, or sell high and let it go worthless. That's the way we do as sellers. I believe the next one on our list is Applied. This is Applied Digital. APLD is the ticker. Oh, by the way, none of this stuff is, I'm not an expert. I'm not a financial manager. None of those good things. None of this is investment advice. I'm just hanging out on here talking about some trades that will be interesting and how you can get into these trades if you decide you're interested. All righty. That's what I'm doing. I'm helping to talk about the strategies you would use on these trades, not necessarily telling anybody to go buy anything. I'm not. Okay. Let's look at the chart. Applied only has monthly options. Notice it doesn't have the weekly like AMC and with that space. It doesn't have weekly. It's only a monthly. We want to see the chart though. Let's see. Oh, look at how Applied has had a nice little run up here. But let's see what it's looking like as far as some support, even after it has run up like it has. It seems to be hovering. It seems to be consolidating. This is a daily chart, so all these candles are 1 day each, but it seems to have stayed inside this zone. You see that? It has stayed in the zone. Get in the zone. Auto zone. It has stayed in the zone for all this time. You see that? We're not talking about auto zone. We're talking about Applied. Applied Digital. It ran up back in the middle of May and have been hanging out up here ever since. If we're looking for support though, current price is at $9.41. I would say our current support would be the bottom of Friday's candle, which was a big red candle. The low of Friday's candle, the close is what I really want, not the low. The close was $8.09 on Applied. And you see that's a support here across the board. You got a few other places where that was a good support. So that means about $8 would be a good place. 8 or below would be a good place for our cash secure put. So let's go see. We only got to go out the 1 month, right? If you're feeling, as sometimes we say, if you're feeling froggy, you can go with the 9 strike. This 9 strike on Applied means you're leveraging, okay, the 9 strike, 9 times the 100 means you're leveraging $900, right? $900 minus the premiums that you take in. This 9 strike is paying $115. Now let's talk about when you get premiums. When you enter these seller trades for premiums, the broker gives you this premium money right away. Soon as you enter this trade, the broker gives you this $115. Once it's filled, once the trade is filled, the broker gives you the money right then to do whatever you want to do with. Right? If you decide I'm taking this $115 from Applied and I'm going to go buy, a few shares, you can. You can actually take your $115 off Applied, go buy 10 shares of Applied, and you're growing your shares if you want to do it that way. If you want to do it just for the income and for the money, not to buy shares, but to go buy some more options, basically do whatever you want to do with it. The money's yours. The money is yours. The broker has blocked up the rest of it until this trade is over or until you close it. Till you close this trade, okay? So if you go with the 9 strike, you're going to receive $115. Broker is going to block up, what's that, $785 while this trade is on. And your desire is that price will stay above $9 between now and July the 21st. You can go down if you're feeling like, 8 was where our support was, because we looked at the chart. Our support was at 8. So if you really like 8 better, which, would be wise, you go there, and the 8 strike is paying $75. Well, let's be wise, right? We want to use, no reason to use our chart if we're going to ignore it. So let's get the 8 strike. At the 8 strike, we are, keep hitting delete. At the 8 strike, you are leveraging $800 in capital, and the broker is giving you 75. So you're really only leveraging 725. All righty. We good? Everybody good? Everybody good? Everybody good? Everybody good? Let's look at EOSE. That's our next cash secure put. EOSE. EOSE is an energy. I actually like EOSE. They're doing some really good things. And this is what you need to do on each of these stocks. Do some due diligence. And, I used to hate when people would always say, do due diligence, do some due diligence. I'm going to leave that because I was going to start to that. We're not going to get sidetracked on that because I can. But due diligence, basically what I find, because people go real deep into it, and sometimes I struggle with all the things people are supposed to do just because, I have to stay focused, or I struggle with staying focused. But definitely go find out about the company, find out what they do, look back at their chart, kind of get their history, find out a little bit of something about them. I'm notorious, I can be, for just, trading it because it provides what I'm looking for, but it would be best to know more about the stock you're going to trade. Because if you end up with shares, which you very well could, when you're doing cash secure puts, the likelihood of you ending up with the shares is there. It may not be high, but the likelihood of you getting the 100 shares is one of the consequences. I mean, it could be a consequence. It's not always the consequence, but it could happen. So if you're going to end up with shares, you kind of want to know a little bit about the company. Do you want 100 shares? And if you're like, if they do something that you're dead set against, then don't trade a company that you could end up with shares on if you completely disagree with what they're doing. But you got to know what they're doing, right? So looking here at our chart. Well, this is an interesting chart. EOSE has been running up. They've been going up ever since the end of May 26th. They've been on a nice uptrend ever since then. Today, they must have got some really good news. I was teaching today, so I didn't have any time to go look and see anything was going on, but looks like something happened in their world, because they opened at $3.49 and they're currently at $4.15. What's that? 65 cents of movement in one day? That's a lot. If we're looking at support, I would say our support's in this area, but I'm going to change this chart to a line chart so that way we can see if there really is a chair here, and there really is. There's something that happened right in this spot right here. The bottom of this would be 350. Looking at the line chart, you look for the peaks and the valleys. This is a valley or a dip, baby. So 3.5 is where that low is there. And change it back to candles. So at right in here, 3.5 would be the place that I would look for a strike. So let's go to the trades screen. Let's look for this week first. EOSE 3.5 strike was where we found support. It's paying $5. Nah, we want to try to get to 10% if possible. 3.5 for the subsequent week is still paying 5%, $5. Let's see what's going on. It's because EOSC is up so high, the price is going up. So the premiums on the puts are not going to be great because the prices are going up. You always get better premiums when price is coming towards you. So if the price was coming down today or down when you're entering, you will get better premiums when price is coming towards you. It's kind of counterproductive and can be a little scary. You're like, if price is coming down toward me, why would I pick this strike? If you're picking that strike, believing that your support was at 350. So even if it comes down, it's going to come down and support and hit the support and go back up. So you do want to get premiums. It'd be better to get enter these cash secure put trades when prices are going down. And today, EOSC is going up. It may not be the best day to enter EOSC because you want to enter it on a down day, but you could do a covered call. You can do a covered call on an up day because price is going up and it's more towards it. So I am going to I'm going to go ahead and enter the cash secure put just for the sake of our video. But generally, I would enter a covered call more so than I would a cash secure put when price is going up, especially since price has gone up so much today. Cover call is going to be perfect. So we're going to do that in a second because EOSC is on the list for covered calls too. But I like July 21st. The 3.5 strike is paying about $30. So, you know, what you can do too, if you like a particular strike, but you want more money out of it, or you want to just set it for, you know, whether you can get money out of it at some future time, you know, put in a premium you like. If you like $40 better, $35 better, open up this trade, put it on good till cancel, and just let it sit until it picks up. You like the 3.5 strike, but you don't like the price it's paying right now. Open up the trade, or at least, you know, open up an order and let it sit there till it picks up. Then you can see it in the working orders. And if you want to adjust it at some time in the future, then you can. All right. Do we have any questions? I cannot see the YouTube stream. So if there is questions on YouTube, please let me know what they are. I cannot see that stream at all. I wonder if I should. Oh, can I go to YouTube from here? Let's see. Let's see if we can go over there. That way I can see. I can have the stream on YouTube running at the same time. Then I can maybe see the comments on YouTube. Okay, current live streams. I'm there. It's open. Okay, I don't want the sound. Okay, yes, I see. Oh, I see the comments are from there. Those StreamYard comments are coming from YouTube so that I can see the YouTube comments. Wonderful. Wonderful, wonderful. Let's go look at covered calls. We looked at cash secure puts, so let's look at covered calls. First, let's talk about covered calls. I'm going to leave this on EOSC because we're going to look, we can go ahead and enter that as a covered call. When you're selling covered calls, you either need to have 100 shares of the stock or you need to have a long call, right? You're covering a call. So if you own 100 shares, that's a call like going up. If you have an options contract, that's a call. You can cover that by selling against it. It's a covered call. Yes. What's the name? It's still going up. EOSC is still yet climbing. All righty. So let's look. What would be when you're dealing with selling covered calls? You want to find resistance, which as I go back, I don't know if EOSC looks like it may be over in here. Because it doesn't look like EOSC has been up here. But here's some support, some resistance over here in this area. So let's go see what actually is our resistance. What are we talking about? This is, oh my goodness. So June 2023. 2022 looks like April of 2022. is where we are. I'm going to go here and let's make it bigger. I think it's got us. Are we in June or May of 2022? Where's my line? There it is. Here we are. This isn't even June. This might not be. It might be further along, and I think it's not. Oh, I'm sorry, you all, for dragging your eyes like this. I'm looking for that line. There it is. Come back here. Trying to see the resistance line I had there. To see where is some resistance. Okay. Wow. It's not doing what I want it to do. Okay, here we are. This is current. Current price is we're here just coming up to a resistance area of about 4.3. 4.3. And we got that resistance back from back here in actually March and April. Right here. Looks like this is April the 4th and 5th. Somewhere in here, we see this as a resistance area. The way we find resistance, we at current price and we go back and we look up, even if it's a small diagonal, to see where was a place where price hit and turned around. Notice back in March or April of last year, it got up to this $4 area and went on down from there. This is a daily chart, so all these candles are a day, right? So if we're looking for a covered call on EOSE, we probably could look at the 4.5 or the $5 covered calls. Okay, let me see if I already have 100 shares here to cover, or do I need to purchase 100 shares first? I do not have 100 shares of EOSE. So if you're going to do a covered call, you either have to have a call or you need to have 100 shares. All right. So you're thinking, if this 419 and you're very close to resistance, you may not want to buy the 100 shares and then do a covered call because you're still very close to the resistance. You know, that may not be the best move. If you already had 100 shares and you were just wanting to cover them and you already own them, that will be good. That will be really good. I do like that I like EOSE, so we could buy our 100 shares here, but I don't think we're going to do that because price is steadily going up. Wouldn't be the best move there. Let's look at Open. Open was on our list. Open Door Technologies. See what the chart looks like. Covered call on Open Door Technologies. Excuse me. Got some resistance. I'm just looking here to see where current price is, just as an eye chart right now. But looks like it may be right up in its area of resistance too. We're here. Resistance would be over here in the October time frame. Let's get a little bit bigger, see where we are. October, where's my line? Nope. Bring this down so we can see, where's the line? Just put it, I put it way down there. Let me go grab. Why does this feel like it's all wonky? Here we go. Looks like resistance in this area is about 336. We're right here in this October time frame is where is a resistance that I just found. And it's about 336. Current price is 295. So now the good thing about having resistance is that you would do covered calls above that. So it being close wouldn't be the problem, but you don't want your stock to, if you already own Open Door and you are covering it, then that's great. But if you are going to buy the shares just so you can do covered calls, you don't want it to be as close, maybe not as close to resistance as this. Even though there's about 30 cent, 40 cent almost between current price and resistance, 40 cent times 100 shares. What's that, $40? 100 shares gives you $40. So all that money adds right on up. It adds right on up. So let's do that. Let's buy us 100 shares of open. The way we're going to do that is we get up in here where it's bid and ask, the BA there. It automatically populates with 100 shares on Thinkorswim, and we're buying them at $2.96. So $2.96 is going to be our cost basis. Cost basis says we're buying them at $2.96. That means that's our cost per share. That's our cost per share. So we spent $296 on 100 shares of Open Door. Then if we want to do a cover call, you can go and cover it immediately. We're looking for, we want to be above this. We talked about our resistance in the 340s, 336 area. So we could do a 3.5 resistance. Well, 3.5 for this week is paying $2. We don't want that. Let's go out a couple of weeks, see what 3.5 is paying. It's paying $11 if you go to July 14th. Let's go to the 21st. 21st, 3.5 means you paid less than $300 for shares, and now you're going to do covered calls. You actually would wait about 25 days. Actually, you get the money right away. You're not waiting 25 days. The money's given to you right away, and you just have a covered call, but you own the shares. 3.5. We're going to collect the 14. I'm putting in $15. And we're going to put in our covered call trade. Means we're picking a price above current price, generally above your resistance that you don't think price will go to get money back or collect premiums off of these shares. Covered call is a part of the wheel strategy. Part of the wheel strategy where you sell cash secure puts. And if you end up getting put the shares, then you sell covered calls on the shares you were put in your account. Basically, you paid for them. They weren't a gift. You paid for them. You sell covered calls against them until price breaches it, and then they get called away, and then you start the wheel again. You go sell cash secure puts. If you get put, you sell covered calls, and you continue to work the wheel like that. That's the way that works. The next one on our list, KLR. We got two more. We're going to wrap up. How much is the July boot camp class? It's $47 for the boot camp. Thanks for asking. The boot camp, 2-day boot camp is $47. This is our fourth round. We're on round 4 of our boot camp. It's basically an introduction to options, period, and it takes us specifically down the road of option selling. But I want people to see what is options about, because some folks hear about options and don't really know what it is all about. So we have to show them what's all about first. What's it all about? KLR as a covered call. KLR. Looks like the price is currently $4. Probably would cover it at $5 since it doesn't have a whole bunch of strikes. This is Kalira Incorporated. I don't know anything about KLR. Again, please go and find out about the stocks. I like the way this is looking, but I don't know enough about the company to be able to do, trading a covered call or whatever. But, you would buy 100 shares for $4. Let's go do that. Buy 100 shares for $4, and then you do a covered call on it at $5. Collect your $25 in premium, and you just rinse and repeat your covered calls until they get called away. You rinse and repeat that, collecting premiums until they get called away. The KLR is another monthly stock. It's a monthly options contract, so It doesn't have weekly, it only has monthlies. So we bought 100 shares. Now we're going to sell. We got to go to the bid column on the call side. We're selling a covered call. I'm only going out to July 21st. Confirm and send. This is our covered call, collecting $25 on the $400 that we spent in buying the shares. If the 5 is breached, so if the price on July 21st is above above $5, sorry, then the shares will be called away at a price of $5. So we paid $4 for them, and we're picking $5 as our covered call. So if the price is above $5 and they get called away, they're called away at the strike price that we selected. They're called away at the $5 strike price. So then that extra between you paid $400, you're going to collect $500. That means that extra $100 is your profit. Plus you collected premiums. You collected $25. So you're going to get 100 plus the 25. So you made a profit of $125 off of a $400 investment. You invest $400 within 2 or 3 weeks, or actually 25 days, you can change your $400 into $525. That's what, a 25% return, 25 plus almost a 30% return on your money in a month. Okay, you know that's not going to happen at anybody's bank. Even the good ones aren't returning 25 and 30% returns on in a month. All right, applied was the last one. We did applied on the cash secure put side, but let's look at it on the covered call side. I want to go to the chart and let's see, what do we have for resistance? I talked about it being in this zone for a while, and it's traded inside of this zone. Current price resistance is right where that line is, 1032. It went up Friday to 11 and some change, but then it closed. Well, actually closed down here. This was the open, was up here. Opened high, went up to 1062, came on back down. It closed at $8. It actually was a pretty big drop for a one-day move. Couple dollars. That was a lot, $3. But the resistance is about 1032. This is about $1 above where it's current price. Current price is $9.44. If you already had 100 shares of applied, you just would pick a covered call strike above that. If you don't have the 100 shares of applied, or you don't have a long call, you can either get a long call or you can buy the 100 shares if you want to do covered calls. If you're buying a call, you need to believe that it's going to keep going. Having the shares means you can hold on to the shares and they can stay in the zone for you to just sell covered calls against them. But if you buy a call or a long call, you're expecting that price is going to go up. Jamie says KLR is in the tech sector, in the software application industry. Thank you. Their competitors are Zoom and CRM. That's interesting. KLR is a small buddy, but thank you for that. I always appreciate when you provide supporting data. Appreciate that, Jamie. All righty. Applied. I'm going to go the route of getting the shares, because again, it's not something I trade. I'm not buying I wouldn't buy a call on it just for that, but having the shares might be a worthy move. So let's go get us 100 shares of applied. Even though I'm going through a whole bunch of different stocks, you should look at the ones that suit what your interests are. Maybe you do one of these or two of these, or maybe you pick a couple and you rinse and repeat week after week. I'm just putting some things out there for you to look at. Not suggesting that anybody go do anything. I'm saying take a check at these. Look at these and decide if they fit your trading plan or your desires or your goals for your trading. So we just bought 100 shares at $9.49, I think, or $9.50. So now I'm going to go look at a covered call for those. We said the covered call, the resistance was 1032. So we want to be above the resistance, at or above the resistance. July. This is also Applied is also a monthly stock. So if we want to go above the 1030, we need to go to the 11 strike in order to do our covered call. We want to go the bid column on the call side, $11.90. Basically says you're going to collect $90 as your covered call on the strike on the shares that you just bought. And you're doing it at the 11 strike. So what that says is if on July 21st, the price of applied is above $11, they will call your shares away at the price of $11. Well, you paid $950. You paid $950 for shares. They're going to give you $1,100. The difference between those two is your profit. $950 to $1,100, $150 in profit plus the $90. So you actually got $240 in profit for a $950 investment. About 25-30% return on that as well. All right. I've covered a bunch of stocks today. I'm going to stop sharing. Here we go. Let me minimize this and bring this back so I can see this head on. Can be looking off to the side. There we are. Cool, Rita, I'm so glad you joined us. Boot cap is $47. All righty. I sure hope this has been of value. We've been here about an hour. I sure hope it was valuable. We'll be back again tomorrow. We'll look at those trades, see if anything else is of interest to us. We'll visit those and see when do we maybe want to close those or, collect our profits off of what we already have going. See if there's anything new that pops up. Check on what's going on. We'll do all that. Yes. Again, like I said, I sure hope this was of value. If you haven't yet, please subscribe to the channel. You want to be ready tomorrow when I come back and subsequent days when I return. Alrighty. We're going to do this on Facebook and the places. Yes, I will. We're going to do this on Facebook and on YouTube for maybe a week or 2 weeks. After that, we're going to only be on YouTube. So I'm not sure how many people I have viewing me on Facebook, but if you're there, you're going to please want to go over to subscribe so that way you can be ready to see it on YouTube. All righty. The stocks that we covered today were we covered Space, we covered AMC, we covered Applied, we covered EOSE. We looked at Open, decided not to do anything with that one. And we did KLR. Space, AMC, Applied, EOSE, Open, KLR, and that's all. Open and KLR. Is that all on 1, 2, 3, 4, 5, 6? 1, 2, 3. 2 of these were over here. Yeah, that's what we did today. All right, very welcome. Thank you for asking me to put those back in there. All righty, you all. Again, like and subscribe to the channel, please. I'm really trying to continue to grow this and provide value for option sellers because that's what we are. We're option sellers. All righty. I will see you all on the broadcast and in the social media world. Be sure to follow me at all the places. I am Educator2Trader on Instagram, on TikTok, and Facebook. You can join the Facebook group too. Facebook group, you can join it for free. We also have a membership, that the Educator2Trader membership. We have morning calls, morning pre-market calls. We have bi-weekly coaching, an exclusive Telegram group where people are there, including me. We're all there to help each other trade. That's where we discuss different things. If people are running into trouble, they need support. That's what we use the Telegram for. It's for all things Educator2Trader. And you can find all this different stuff at Educator2Trader.com. All righty. I'm going to say goodbye and see you all tomorrow. Same time, same bat station. All right. Bye, you all.